What's up? It is Big Chart Trades, and in this video, I'm going to be going over a highly requested subject: open low high close and open high low close. So these are two types of different candles, and you can use these to trade. So for example, an open low high close is a bullish formation, and what that is the candle opens, manipulates lower, goes higher, and then closes. And then a bearish open high low close is the candle opens, manipulates higher, goes lower, and then closes, putting in the top and the bottom wick. So in open high low close, the bearish scenario, we are looking for entries at this manipulation up here for price to go down, and for bullish open low high close, we are looking for entries here at this manipulation lower to go up. Now, I'm going to show you some examples so you understand what I'm talking about, but let me just write it out because it can be confusing, so I'm just going to write it out for you here. So before I show you any examples, I have it written out for you right here. Open low high close is a bullish formation. Price manipulates lower, puts in a bottom wick, trades higher, and closes, putting in a top wick. And open high low close, which is a bearish formation. Price manipulates higher, puts in a top wick, trades lower, and closes, putting in a bottom wick. Now I'm going to show you an example on the chart so that you can actually see this in real time with the weekly candle. So right here, this is an example on the daily time frame. We're using the weekly candle right here, and we are actually bearish because price just changed the state of delivery on the daily time frame to the downside. So we are anticipating a what? An open high low close, which is the bearish candle formation. So let's see what price does. Okay, on Monday, price opens, okay, puts in the open, goes ahead and manipulates above this high, goes down on Wednesday, on Thursday, and then goes ahead and closes on Friday. You see, open high low close. Let me replay that again just so you can see for yourself. So Monday, price opens. This is the weekly candle. Okay, goes ahead and puts in a high, creates that top wick. Then Wednesday trades a little bit lower. Thursday distributes down, and then Friday closes, putting in that bottom wick. So you could see how price literally opens, manipulates higher, trades lower, and then closes. That is a bearish candlestick formation. Let me go ahead and zoom in a little bit and show you on a closer time frame so you fully understand. Here we are on the hourly time frame, and as you can see, price opens up right here. Okay, and what happens? We manipulate higher on Tuesday, and then we trade lower all the way into Friday, and then we close. You see that open, high, low, close. Now, what does this remind you of? This is a concept that we've talked about before, that I've talked about several times. This looks very similar to accumulation, manipulation, and distribution. So, what is this right here? As we open, this is accumulation, right? Let me make that, I guess blue is fine. This is manipulation. Why is this manipulation? Traded above these highs. Okay, so everything above these highs, manipulation. And then the distribution. Right? So that's AMD right in front of your face. Right there, accumulation, manipulation, distribution. So this is the weekly candle. Price opens up, puts in a high, puts in a low, and then closes. Open, high, low, close. Okay, now let me show you a bullish scenario. So right here is a bullish example. Remember what a bullish candle looks like? It is an open, low, high close. It's the opposite of a bearish candle. A bearish candle is open, high, low close. A bullish candle is open, low, high close. So on Monday, we go ahead and sweep this low, right? We make that bottom wick. On Tuesday, trade higher, Wednesday, higher. Thursday, higher. Friday, we close. Okay? This is a bullish candle right here, as you can see right there. Now, if we drop to a lower time frame, you could see the open, low, high, close in its full capacity. So what does price do? Right? Here's the open. Price opens. Price manipulates lower, takes out this low, trades higher, and then closes. So this is the open, low, high, close. We can also see the accumulation right here when we open. And then we can see the manipulation below this low. And then we see the distribution. This is the distribution. AMD, power of 3. Accumulation, manipulation, distribution. Right? So we can combine open, low, high, close, and open, high, low, close, and AMD, power of 3, to sort of anticipate where price is going. Now, this is extremely helpful with the weekly candle. This is extremely helpful with the daily candle. This works on every single time frame. Time is fractal. A lot of people use the power of 3 with the 4-hour candle. I can get into that with another video. I can make a whole entire video about the power of 3. Once again, I have these terms written out for you so you can go ahead and take notes. Open, low, high, close is a bullish formation in which price opens, manipulates lower, trades higher, and closes. An open, high, low, close is a bearish formation in which price opens, manipulates higher, trades lower, and closes. So this is a full guide to open, low, high, close, and open, high, low, close. And this is probably one of the most important concepts when it comes to trading that will literally help you tenfold if you implement it properly. So with that being said, subscribe down below, like this video. I'm making tons of more videos just like this on every single topic that you need to understand when it comes to trading. So go follow me on Twitter, Instagram, if you'd like, whatever. Hope this helped. Have a great day. Oh, also leave a comment if this helped you. I love reading your guys' comments. It's amazing. Have a great day.